Welcome to the Growth Enablement Madness podcast, and I'm Jim Ward, your host, CEO of BrainCell, the growth enablement company. I'm absolutely mad about helping businesses grow and scale. And in this podcast, my team and I get a chance to talk shop with industry thought leaders about a variety of growth enablement strategies, stories, and technology trends. I'm happy that you're here, so let's get the growth conversation started. Hi, everybody. This is Jim Ward. I'm CEO of BrainCell, and this is the Growth Enablement Madness podcast, where we're crazy about helping companies grow and scale. With me today is my trusty co-host. I guess I can call you trusty.
I'm trusty.
I'm going to go with Sarah, too, because that's a funny name. Sarah Reed. We have our production person, Brian Anderson. Thank you, Brian, for producing this today. And our guest, who we have with today. This is a very timely topic for everybody. This is a gentleman who I was introduced to because we had been growing as a company, and I had told this a business associate we needed somebody who would grow with our company, who's a CPA that has experience in growing companies, and we've hit that stage. And I'm very proud to call this person, an excellent CPA who I rely on for guidance and also a friend. His name is Craig Eaton. Hi, Craig. How are you?
Yeah, I'm very good.
And Craig's company's name is Eaton Advisory Group, and he's a CPA. And we're going to be talking about Section 179 today. Craig, tell us a little bit about yourself and your background.
Yeah, sure. So I've been a CPA advising small businesses, high net worth individuals for about 30 years now. My focus is mainly on businesses that are closely held, individuals with S corps, flow through entities, and giving them advice both from a business perspective and also tax savings. Taxes is I think the biggest expense that every business faces. So it's about you have your silent partner being the IRS or the state, and they own about 40% of your bottom line. So any way that I can help to find ways to benefit from the tax code, that's the advice I give to all my clients.
Now, I want to say that the IRS are very, very nice people. I've enjoyed all of them out there that we've ever had to work with, but Craig has helped me to make sure that we don't have to work with them. And thank you, Craig, for that. We're a high integrity company, so that's never going to be an issue at all. So, Craig, the interesting subject that comes to the end of the year is this Section 179. Tell us a little bit about Section 179. And this, to some degree, to be absolutely transparent with the audience, is self-fulfilling for us because we are in the software business. We resell software. We perform implementations on CRM, ERP, et cetera. But tell us a little bit about what Section 179 is.
Sure. Yeah. 179 has been around for a very long time. I remember the first time I heard Section 179 as an intern back in the early mid 90s. The deduction for Section 179 was a mere 17,500. Now, what this election is, people in my office at the time were saying, "Hey, did you 179 that?" What does that mean? What do you mean 179 it? Well, it's an election. It's an election you make on a depreciation form called 4562. That's the form number that gets filed with any business return that's taking a depreciation deduction. What it allows you to do is take an immediate deduction for any capital asset that you buy, with certain limitations. But it allows you to take 100% deduction for an asset that you purchase, which typically you got to depreciate over time. You got to, with software, it's 3 years. With equipment, typically 5 years. Furniture and fixtures, 7, so on and so forth. So as long as you meet the requirements of 179 as far as the purchase is concerned, you could take an immediate deduction by making that election on your tax return.
So I really hear you right just then. I don't have to amortize, depreciate. I can take the deduction that year, close of year, so tell me the benefit of that, by the way.
So, okay. So the benefit of it is you get the deduction immediately. So time value of money. It helps also being that it's when it falls in the tax bracket, it falls on the highest tax rates first. So if you're in the highest tax bracket, any deduction that you take by accelerating it into the current year, you're getting that at the highest. So let's say you're at the 37% is currently the highest rate. You're
Yeah.
getting a 37% federal tax savings. Plus, you got your state. Your state might also be 5%. So you're looking at a 42% savings. So when you look at the cost, the ticket price of the item you're going to buy. Now, if I do this, and we're all consumers, we buy stuff. If I'm going to buy a car and the car is $100,000, and because I'm going to get something that's going to be 100 grand, so it might, may as well be like a new Tesla Cybertruck. I'm going to spend 100 grand.
Yuck. Oh,
That's going to be
sorry.
$100,000 of actual dollars out of my pocket. As a business owner, now that truck weighs over 6,000 pounds. This is another thing you can do. So you could actually write that entire purchase off. So imagine someone put the sticker price in front of you and said, "Hey, this is a $100,000 truck, but guess what? I'll sell it to you for 60 grand."
Right.
You're going to say, "Well, you know what? That actually makes good business sense for me to buy this because I'm going to get a deduction immediately. The government, my silent partner I talked about earlier, is going to actually help pay for that with a tax
Boy.
deduction." So that's the really the business sense of making that Section 179 deduction. Now, again, it goes well beyond just that high level example because there are some times when you don't want to pull the trigger on that. So it really depends on your tax situation before you make that election.
So there's going to be criteria, I'm sure. You mentioned a weight, for example, for vehicles, but I just go back to the Tesla example, the
Sure.
Cybertruck, which I said yuck to, and I apologize to Elon. I don't find it very attractive. I just had to go there for a second, and I saw an Instagram clip where they were proving that it perhaps was bulletproof. I guess there's somebody that says they're bulletproof, and I said as a comment, I'd shoot that truck too if I had it. Anyways, moving right along. Sarah, can you put your laughter right into the microphone? It's okay.
Sorry.
By God, we need the background sound. Um, so let's talk about software since we're in the business of software. Software purchase $100,000. Same example, and is there criteria that they need to meet in order to take advantage of that?
Yeah, so software. This is now I'm going to talk like back like I was in the 1990s. Canned software. So that was a term back then was canned software. You can take a Section 179 deduction on that. So that's basically software that you buy off the shelf. It hasn't been altered. It's generally available to the public, and you own it. So software has changed now. Now you can access your perpetual license through a SaaS model. So same thing. It's that downloadable software or hosted software that you're making that large $100,000 purchase on will still meet the criteria as long as it satisfies the purchase requirements, meaning you paid for it and it has a life beyond a year. So as
Okay.
long as it has an extended life and it's what would traditionally be what you would call your canned software, then it's going to be the same treatment where you get to actually take that deduction and with Section 179 by making that election.
But what about SaaS today, software as a service? We have Sage Intact, we have Sugar CRM, Salesforce, all these products, HubSpot, and they are, offered in the same configuration to everybody. Is it applicable to those products?
Yeah, yeah, it could be. So if you're buying a license, if it's a perpetual license, then yes.
So it wouldn't. I don't think it's called perpetual in the SaaS world. It's a software as a service.
Mhm.
So I'm guessing would it still apply?
So it depends. It depends. So it depends on the contract itself.
Okay.
So if you pay for the license up front and then your
Yep.
contract is really the maintenance aspect of it, the upfront cost of the contract will likely be Section 179able, and then the
Ah,
maintenance will be deducted as you spend it.
got it. So in sauce, oh boy, sauce. I ought to drink some sauce. I can't say
Maybe you already
sass.
have drank some sauce and
Maybe
that's
I
why.
have. That wasn't water. So in the SaaS world, we sell a contract for a year, right? And it is
Mhm.
paid up front.
Yep.
Sometimes it's a multi-year contract. So it sounds like I don't want to put words in your mouth that that would apply.
Yeah, that 1 year contract. Now, if it's auto renewable, so here's the thing with it. If it is just a year contract, you're going to
Yep.
get that deduction anyways because it's all used within a year.
Right.
So now,
Ah, interesting.
yeah. So it just depends on it really depends on the software and the contract that you're
Okay.
you're signing. So it does depend. So if you're buying a license, and with that license, it's a large spend up front, and it's a license that's perpetual in its use,
Mm-hmm.
meaning you own it, you own that software, and you get to use it as you will. Now of course, a lot of the SaaS models have their maintenance built into that as well, so that's
That's
what you're
right.
paying for on a monthly or on an annual basis. So those type, some might fall into areas where you're taking a deduction when you actually spend, uh, when you renew each year.
Okay. So really what we should be making sure we do with clients is get them to talk to you so they know what their how they would apply 179 or whether it was an expense item, right?
Right. Yeah.
Okay.
So yeah, it might fall under expense. Either way, um, you're going to get that same treatment. So you can't get a deduction for, let's say, next year's contract that
Mm.
you
Okay.
So,
because
yeah,
you know
that's what I was
because
thinking.
it's not a perpetual. It's a renew every year. So every year that you make that software spend, and it's only a year contract, you're going to be taking a deduction when you make that expense, when you make
Got
that.
it.
So.
Makes makes
But so
sense. But we're gonna make
179 certainly for software that you are downloading on your systems, or you're accessing that you, even though it's hosted somewhere else. Like, let's say, a lot of these SaaS models now are just like you're describing, where those software products are annual.
right, right. And then there are some where they're perpetual and we simply put them in a hosted environment
Yep.
and their access there. Got it.
Hmm.
So, but we're going to want to make sure, guys, when you do buy your software, you can ask our team, and they can certainly put you in touch with Craig, or ask your CPA. Yes, Sarah. I think you had some thoughts as well,
Just
didn't
just
you?
a just a few,
Okay.
Jim.
Okay.
Um, One question, Craig, and I'm sorry if you mentioned this and I missed it, but you said back in the 90s it was like a $17,000 ballpark. Has that changed? What's the
Yeah,
max
it's
you can?
changed ever so slightly. So now it's 1,220,000.
Oh,
Oh,
it's kept
just
up with
just a
inflation.
So just a little bit. So 17.5 was it. And Massachusetts stayed at 10,000 for a little bit, and then they got in line. So they were originally decoupled from the Fed, and then they aligned on their Section 179, which is a good point. Not every state out there. So for non-Massachusetts folks, certainly understand your state rule, because some states will have limitations on the amount of 179 you can take. Some states are aligned with federal, where it's the same deduction, that 1.2 million, 1.22 million.
1.2 million.
Yep.
That's a
1.2
pretty good
million of
number.
immediate expense. Now, here's the catch though on that. You can't have more than $3 million, 3,050,000, of qualified purchases for the year. Once you have over 3,050,000, you start to phase out dollar for dollar for every dollar up to about, just over $4 million, 4.27 million. Um, so large companies, this is
Yeah.
generally a small company deduction. So
Right.
large
Mm.
companies like Google or Apple or Microsoft aren't taking 179. This is sort of irrelevant to them. But you have to talk to your tax advisor, make sure that you qualify, that your purchases qualify, and that there's really complicated rules around aggregation. So if you own several businesses, you might be limited, because you have common control over several businesses. So you think of ways to sort of work around that limitation. Well, people would just open up another corporation and say, "Oh, okay, I got it
I
here
see.
too," and find a way to sort of maneuver those rules. But you can't do that. They're going to aggregate that Section 179 across both because you get common control.
Got it. Mm.
Great. Are there, and maybe it's just right misalignment, but are there other kind of common challenges or mistakes that you see companies making when trying to leverage, or maybe they're just not leveraging it at all, and that's one big mistake.
Um, yeah, so common mistakes, I mean, understanding what your tax situation is for a particular year, understanding where things are in the future. So when you look at taxes, you want to make sure you're looking at not just the current year, but also next year. So if your tax rate's going to be much higher next year and you just had
Mhm.
just an okay year this year, you say, okay, well, it's gonna work better next year. Or the reverse situation. If you're in a really high tax bracket this year and next year, you're projecting that profit's going to be down for whatever reason, maybe markets changed a little bit.
Mhm.
Um, you might want to make that decision to purchase that software and put it into service prior to year end. As long as it's put into service before 12/31, you're going to get the deduction for this year. So you want any CPA should be able to analyze this over multi-period situations just to make sure that it aligns with what the company's. Because at the end of the day, when you're buying software or you're buying equipment or you're buying anything, there's ROI on that. Otherwise, you wouldn't do it.
Right.
Um, don't let the tax tail wag the dog, or is it the tax dog wag the tail?
Yeah.
Either way, don't let that be the only reason why you make that decision. Don't buy software because you're going to get a tax deduction. Just like don't buy that Cybertruck just because you're going to look cool driving it. Um, so simply buy the software because you know you got an ROI on it. Now that election can be made to take that deduction. But here's the beauty of 179. You get hindsight on that. You don't make that 179 election on 12/31. You make that section 179 deduction or election on your tax return when you file it.
Mm.
And you could have up till, depending on your type of entity, you could have all the way up till October 15th of the subsequent year to make that election.
Right.
So you have time. So you can already see what has happened in the prior year and say, hey, wait a minute, maybe I want to not make this election. So you have time to make that election. So it shouldn't, if you're going to make the purchase anyways in Q1, give yourself the flexibility. Buy it in December, and it's going to be a purchase you already budgeted for, and now you have the flexibility to then plan around it. So that decision that you can make on taking that deduction or not taking it, you have several months before you need to make that decision.
Right. Great. Any changes you see coming around Section 179?
So 179 has been made permanent. So that's going to adjust with inflation. They would have to change the law to get rid of 179. 179 has been around since 1958,
Mm.
when it was $2,000 way back when. So it's been around for a long time, and it was made permanent. Now, bonus depreciation is scaling down. So bonus depreciation functions a lot like Section 179, where it was 100% bonus on your purchases. This bonus depreciation has been around for a number of years in many different forms, from 20% bonus to 50% bonus to 100% bonus. That 100% bonus was really driven around the CARES Act. So that slowly phases out. So it's down to 60% for your purchases in 2024, and then it goes down further next year, all the way down to 20% in 2026, and then phases out in 2027 completely. Bonus depreciation's gone. So that's all economic stimulus. That's why the bonus depreciation was put into play. Um, Now, every state, well, not every state, most states have decoupled from that bonus depreciation. Massachusetts is one of them. So if you're a Massachusetts company, taking the 179 benefits you both federally and state. Not taking the 179 and taking the bonus, well, it will definitely benefit you immediately federally, but the state, you're going to have to wait. You're going to have to run the depreciation out the number of years. So in software, it's 3 years. So you'll get that deduction over time.
Bonus depreciation, is that like you get the 179 and you get a bonus?
No, no, it's either
Oh,
or.
darn it.
Yeah, I know. It sounds like it's extra. Anytime I hear bonus, I think extra.
It's you.
There's
Yeah.
no extra depreciation. It's just like it's accelerated depreciation. It's all you're really doing. Why they call it bonus makes everybody feel good, I think. But
Right.
at the end of the day, it's not a bonus. It's really enhancement on 179, and but it's got its own limitations, and it has its own its own set of rules, unlike 179.
Good.
There, a case where since bonus depreciation is eventually going away in the next 2 years, companies should take advantage of that. And I don't know. And then section 179, like, is one better than the other, I guess? And this
I
is a
just want to
marketer asking questions about
Yeah, so
taxes.
so for me, 179's the best, especially
Mhm.
in Massachusetts. It's
Yeah,
that's to the extent you can take 179, you put everything through 179. As long as tax wise it makes sense. Otherwise, bonus is automatic. You don't elect bonus. The only thing you can do with bonus is elect out of bonus. So if you don't elect out of bonus, then you are taking the bonus depreciation. It's not. It's an election out, not an election in.
got it.
Where 179 is an election in by checking a box on that 4562 form.
Got it. Thank you.
Well, that's good information, Craig. And I just want to say to everybody out there who's listening, it's if you're not going to buy the software, don't buy it just because you have a Section 179. Don't put yourself in that position. But if you are projecting and you need it and you're budgeted for it and it makes sense, why not let your partner, the IRS, help pay for it? That's essentially what they're doing is they're helping you pay for it. So take advantage of that. And Craig, what advice would you give business owners who are considering taking advantage of the Section 179 for the first time? Any advice for those folks first time?
Yeah, just make sure if you're filing your tax return that you have a good handle on what the subsequent year's looking like. It's your first year taking that election, and if you aren't in a position where you think that your subsequent year is the numbers aren't aligning, you want to look at that 2 year analysis to see if it makes sense to take it all in 2024 versus 2025. I think that's the one you want to make sure that you're looking at from that perspective. And then also making sure that you're not going to run into an issue of, hitting those purchasing limits and things like that.
Right.
So all that, it's talk to your CPA, and make sure you understand it for that first year. It's a tax election. Every CPA knows it. Every CPA knows Section 179. So it's one that's sort of it's almost a no-brainer, low-hanging fruit here, and I think a lot of people know about it as well, just in general talk. But it's one I think should be analyzed a little bit more than just taking the election without consideration of looking at the current year, meaning you're always filing your when I say current year, in 2024, you're filing your tax return for 2023. So
Mhm.
you got to look at that 2024 year before you make that decision if it makes sense. There's been many situations, especially when it comes to bonus depreciation, where I said, we're going to elect out a bonus. And then also a little thing on 179 is you don't have to 179 the whole you could go asset by asset and you don't have to do the asset class. So just because you select 179, you could just do it on just the software you bought.
Okay.
So, or a specific piece of equipment that you bought. It's not an all-in thing. Where bonus is, it goes class by class and it's an all or nothing based on class asset. So, little different. So
Mhm.
again, these are some nuances that just need to be discussed with your tax advisor,
Yep.
and they're great conversations to have.
Yeah, they are. Here's how mine goes with Craig, by the way. I go, well, what do you think? And he tells me all this stuff, and I'm like, my eyes half closed. And I go, well, do whatever you think we should do. And that's it. Are there any resources that folks in our listening audience should be able to get to and learn more?
Yeah, yes. So there's a site out there called section179.org. That has everything on 179 and actually some bonus stuff on there. IRS website, certainly you can go there. There's economic reports out there that you can find on Tax Foundation as well that kind of give you a breakdown of Section 179. But I think if you're just looking for a general knowledge on 179, section179.org is a good resource to go to.
Well, Craig, this has been awesome. I like to say, and I like to promote people and companies who really have helped me. And Craig, you've done that for me. As I said earlier, we've grown a lot. We've needed more expertise. You've brought that to the table. I'm telling all the listeners out there, if you've been a growing company, make sure you have the right folks around you to advise you with your business. Section 179 is just an example of that. People who are proactive. Craig's very proactive. I get my quarterlies, and there's no surprises for me. There's the ability to just click a button and file. The money can be transferred easily. And thank you for letting me do that really quickly. It gets out there fast, and it's gone. And my partner gets it, which is the IRS. But I really want to thank you for joining us today. Can they find you on LinkedIn?
They can. Yep. LinkedIn. If you look up Craig Eaton and you look under Eaton Advisory Group, you'll find me on LinkedIn. Yeah, that's the main social platform I use.
Okay.
I'm not on TikToks, unfortunately. I wouldn't know how to do one. Or Instagram either. So.
Yeah, or a Snap face, whatever it's called.
Snapchat.
Sarah, do you know? I mean, maybe you can help me out with that.
Oh no, I'm too old to be on TikTok too, Craig.
Well, you ought to see my dance moves though. I'm really pulling it around. You follow me on TikTok, it's going to be crazy.
It's interesting because there are advisors on there that will do your quick little TikTok tax advice. It's pretty.
See?
I've seen some of these ones, and they all do the same. The same
song
thing.
And dance, so to speak.
Probably there's one on 179. Certainly, other tax strategies that are out there.
So that's Craig Eaton, last name Eaton, Craig Eaton, and it's the Eaton Advisory Group. Great CPA. Really, if you could connect with him, you'd be doing yourself a favor. And I want to thank my team, Sarah Reed, my co-host, Trusty, I call her, and Brian Anderson, our producer. And you can find these podcasts wherever podcasts are found, is what I'm told.
That's Sarah. Great. Spotify, Apple, Audible, YouTube, anywhere you prefer to listen to your podcasts, we're there.
So hit subscribe. And this is, again, Jim Ward. I'm CEO of BrainCell. This is Growth Enablement Madness, where our mission is to help you grow and scale your business. Thank you.
Thank you, Jim.
Thank you for listening to this episode of Growth Enablement Madness podcast. I also want to thank Divinio Podcast for this episode's production and distribution. Finally, thank you to Sam Ward for our musical introduction and outro. Be sure to check out all of our episodes wherever you listen to your podcasts, including Spotify, Apple Podcasts, Google Podcasts, and more. New episodes are available monthly and cover all important topics for growing and scaling your business. Until next time, this is Jim Ward signing off. Let's grow.